We are recording, and are we ready to go?
Think so. We're ready.
All right, so somebody's monitoring Facebook. That should be good to go. And go ahead, Brett, if you want to kick off the, how do I click go?
Yeah.
Don't know where to click to add all the attendees. You know, Jason, where I click to do that?
It may already be added.
I think they might be.
Great. So we're going. All right. Well, wonderful. Hopefully we have everybody everybody on the webinar right now, if I clicked all the right buttons. We've done this in the past as a Zoom meeting. So apologies, and please exercise patience with me as I navigate actually hosting a true Zoom webinar, which is slightly different for my first time. So thank you for being here. First, I'm going to introduce myself. My name is Jameson West. I'm one of the strategic coaches here at ConnectStrat. We are a consulting group. We're strategic coaches and work with managed service providers and IT service providers globally, and primarily focused on EOS, but we also work with other strategic platforms such as StratOp, Life Planning, and the like. And first, I'm going to ask my team, my colleagues that are here with me, to introduce themselves. Brett, you're top left on my screen. Would you like to hop in?
Yeah, let's do this really quick because I think our bios are all on the website. But my name is Brett Jaffe. I have previously, in a previous life, was an MSP for over 20 years. I am one of the coaches at ConnectStrat, and I'm also an EOS implementer. Pass it off to Jason.
All right. Yeah, my name is Jason Knight. I'm in Houston. I serve the South Central U.S., also a strategic coach for ConnectStrat and an EOS, a professional EOS implementer. My background is in IT services, building companies, growing them, and I've sold a number of companies in that space, and now full-time focusing on working with MSPs and other IT service companies to help them grow and mature and succeed. Fred, how about you?
My name is Fred Jensen, and I'm based in the Phoenix, Arizona area. And I have a background as a sales and marketing leader at one of the Fortune 500 companies. And I'm a professional EOS implementer and a certified life plan facilitator as well.
Great. Thanks all. And then I also want to introduce, we have a special guest for the first time on our Ask a Strategic Coach series. Happy to have you with us, Rayanne. And Rayanne's going to talk to us a bit more specifically about how to manage your PPP funds. So we're going to jump into that for a moment, but you own an accounting firm, ABC Solutions, focused on the MSP community in all of North America, including Canada, and also a partner at Sell My MSP. So first, could you please introduce yourself to our audience, and then we'll jump in.
Sure. Thanks. Thanks, Jameson. And thanks to all of you for inviting me here today. I'm, thrilled to be part of your Facebook Live Zoom recording. My name's Rayanne Buchianico. Just call me Rayanne. It's a lot easier. And I own an accounting firm called ABC Solutions. We're based in Clearwater, Florida, and we specialize in working with MSPs throughout the US and Canada, helping them set up their accounting system, understand their financials, make sure that they know how to, measure their profits or, get their KPIs, lined up, and, and be able to not only read the information on their financials, but actually use it to make management decisions. So I'm also a tax preparer. We have a full service accounting firm. So I'm an enrolled agent, which means I'm enrolled to practice before the IRS in all 50 states. So I'm not limited by any jurisdiction other than inside the U.S. So, if we can prepare your taxes, we can defend your taxes should we ever need to. Hopefully we would not. But in a nutshell, that's who I am. ABC Solutions has been in business since 2005. So we've weathered a couple of disasters. We had the 2008 market crash. We had the 2010 oil spill in the Gulf. And so we've managed to make our way through both of those things, and yet here we are again, with a pandemic. So this one seems a little different than all of the others, but we'll get through.
Well, thank you for the introduction. We are going to, because we have Rayanne here and we invited her to really get specific around how to leverage and make sure that we're maximizing the funds that we've, many of us have received from the PPP side of the equation. What are the rules? What do we need to do? Before we jump in, Brett is going to share with us his screen. We leverage a platform called 90.io to manage our EOS endeavors and for each of our clients. And in true EOS form, we have a list of issues. We've pre-populated these with the attendees who had suggestions or questions. And so what we'd like to do is just run through those. So Brett's going to pull those up. And I think one at a time we'll present these questions as issues as we would in EOS. And we'll ask Rayanne to jump in and help us answer these questions. And we'll also have the coaches, if there's anything else to add, jump in as needed. So the first question here, do new employees added after the application, after the PPP application, count towards payroll forgiveness?
They absolutely do. There's no limitation on, well, I shouldn't say there's no limitation, but there's no limitation on the number of employees. So you can have more employees. Like if you need more workers, please by all means hire them. And the payroll the wages or the salaries that you pay them during your 8-week period will absolutely count towards forgiveness. You remember, you want to make sure that you spend a minimum of 75% of your PPP money on payroll during that 8-week period. So if you need additional workers, please hire them.
Excellent. Anybody else have any commentary on that one or experience? Jason, you look like you were on mute.
Sorry, just a note that it is during that 8-week period that the payroll applies, right? And then there's a cap of $100,000 for that staff being added. I don't know, Rayanne, if you want to add any color to that. But.
There was another question I saw about the $100,000 cap, so I was reserving that answer for the next question.
Yeah. Good call.
Good. That's great. And by the way, I'll just mention as we run through these, if you have questions, now that we're in webinar format instead of meeting format, there is a Q&A button on the bottom of your screen. So by all means, feel free to add additional questions as we move forward. So next question, which we already started to tiptoe towards. I have my PPP money, but can those over 100K be paid normal salary during the forgiveness period, or do they need to be reduced?
Okay, so Darren, that's a great question. The short answer is they can be paid their normal salary. The longer answer is that the amount over $100,000 annualized will not be forgiven. So you want to make sure that you take that into consideration. Nobody's asking you to reduce anybody's salary during that 8-week period. You may find that it will be easier to reduce that employee's salary to under $100,000 during the 8-week period, and then kick it back up, just for record keeping purposes. However, during the forgiveness period, you will need to take everybody's salary, annualize it out, make sure that nobody's over 100,000, and then remove the amounts that are over 100,000. And I should also mention that the $100,000 cap is on wages only. So employer portion of the health insurance and employer contributions to retirement are still in addition to that $100,000.
Oh, that's great. So definitely new information there. I'm gonna let Brett finish scribing before we move on to the next one. Any other coaches have anything to comment on there? Good.
No, because I think some other questions may address what other components of that are not forgiven. So you had mentioned health insurance and retirement, but I know there are certain taxes that don't count toward that. And I don't remember if there's another question around that.
So I'm not sure if there was another question about the taxes or not, but let me just touch on the payroll taxes for a minute. So for forgiveness, you're looking at the gross wages. So when you're saying, well, what's my payroll cost? You want to use your gross wages. So that automatically means that you don't want to add back in the employee's portion of taxes such as FICA and federal withholding, because they're already in there at that gross level. However, because it's the IRS that is, it's because it's a federally funded program, then you cannot use the employer's portion of the FICA taxes and the federal unemployment taxes. Those will not be forgiven. However, state unemployment taxes, state disability, the state family medical leave, all of those things that your state charges you, those can be forgiven. Unfortunately, for many states, the unemployment cap is so small that many of your employees probably hit that in the first quarter and are likely no longer paying. You're no longer paying into unemployment for them, and sorry for that. But you don't get to add it back in now. So. When we get to the question about accounting codes and tracking, I've got a whole bunch of suggestions that you guys can use for that.
I have a slight, we just had an attendee ask a kind of an add-on question to this one. In what's the number to use for the maximum weekly for a $100,000 employee? So if you're maxing out, what's that weekly amount? Is it just divided by 52? Is that the way to do it?
Yeah, hang on. Let me, $1,923.07.
That's what I just came up with on my calculator. So we did our math via technology the same way. So that's the way we would calculate it, is just strictly divided by 52, and you should be
Correct.
okay.
Right.
Great.
So if you're going to reduce somebody's wages for the 8-week period, that's your number, $1,923.07 per week.
Okay, perfect. Thank you so much. All right, next, federal audits on PPP funds. How do we face those audits? What do we need to be paying attention to?
Oh, great question, Raj. Okay, so we know for a fact that there's going to be a lot of scrutiny over how the funds have been used, and when we get to the forgiveness. Now, it's really important to understand that at this time, we don't know a whole lot about the forgiveness plan. Everything that we're reading indicates that it will be the banks who will have the final say in how much is forgiven. So you want to keep that in mind. Hopefully you have a good relationship with your bank, and so you can stay in touch with them for that. So the one thing that you want to do is make sure that when you're working in these 8 weeks, know in advance that people are going to scrutinize literally everything that you're doing. So when you make a rent payment, right, because you probably, when you create, write your rent check out to your landlord for the office, maybe you get a bill, maybe you don't get a bill. During the months of May and June, you want a bill, and you want a bill or a receipt. And inside your accounting system, I would scan that bill or receipt and make sure it's attached to the transaction. For the payroll, make sure that you have good payroll records. I'm getting a lot of questions like, can I bonus somebody? Can I give them a commission? Can I, how can I, bump this up so that I make sure that I use all of the money? Yes, you can do those things as long as you can produce documents that this was just not, spun up for the sole purpose of using up the money, right? So if there's a good and reasonable basis for giving somebody that bonus or increase, if it's that time for them to get an increase in salary, or maybe it's their quarterly commission, absolutely pay them. I'm not asking you to not pay them. I'm asking you to document why you're paying them and why you're paying them as much as you are. Other things that you don't want to, you don't want to do is you don't want to, go super heavy on those non-payroll related costs. You also don't want to change your employee benefit package. You can't change it for 8 weeks and then change it backwards. So if you say, oh, you know what, during this 8 weeks, I think I'm just going to pay everybody's, health plan for 100% of the time. And then after the 8 weeks, and then I'll go back to paying 50% or 75%. No, that's a clear sign of misuse of the funds. So if you make any changes to your employee benefits or your personnel policies, make sure that those changes are permanent and make sure that they get documented. And above all, be honest, be fair. And I think that's really what we're talking about, and make sure that you've documented every dime you've spent.
So my understanding also is that the banks will be the ones processing the loan forgiveness forms, and that'll likely be a self-certification form for under a certain amount, but those over 2 million in PPP are obviously much more heavily scrutinized. But to your points, I think I would operate assuming they'll get audited. And if you don't, great. If you do, you're prepared.
Right. And that's always my stance too. I am reading that, there will be no fish too small for to be chosen for an audit or scrutiny on this. So, even if you only ended up with $20,000, still do what you can to make sure that you have the documentation that you need. It's only for 8 weeks, but it's definitely a true test of your record keeping skills. I'll create you that.
So I have kind of an add-on question because we're just on topic, and I saw that an attendee, Dwayne Chappelle, asked, do you know how, where, or when people will apply for the forgiveness?
So I believe that the forgiveness period is going to be at some point after your 8-week period and before the repayment period, which is 6 months after loan funding, right? So you get funded on day one. Your 8-week period begins exactly on day one and goes out 8 weeks, or 56 days. We have a spreadsheet that we're keeping track of all of our clients, how much did you get? When did you get it? When's your 8 weeks up? So we're tracking it out 56 days. And where are you going to apply? You're going to apply with your lender. And so the lenders, I think, are currently waiting on, guidelines and guidance from the SBA on how to handle forgiveness. But ultimately, they will be the ones that will require the documentation and the forgiveness application. It will be some form of application that you will have to sign, under oath, under penalties of perjury, and apply for that application. So, and I've been saying this from day one, operate under the assumption that none of it will get forgiven, and be glad when it does. So you have taken a loan, and that loan is a 1% loan, and you'll probably never see that again in your lifetime. I've never seen it in mine. I doubt I'll see it again, but it's a 1% loan. Operate under the assumption that it will have to be paid back in the next 2 years. And hopefully we can get as much of it forgiven if we do, all of the things they tell us to do.
So we get the short, simple application up front to get it, but then the application will have to do to forgive. It's going to be like the 50-page one.
Let's hope not, right? Here, and attach all of these, 500 documents.
It was so easy. Great. That was super informative. Appreciate it. We have a lot of questions coming in as well. So thank you for that. Let's move on to the QuickBooks and accounting codes. You've talked about that. You said you had a lot of information there before the call. You told us. Why don't you dig into that a little bit? I use QuickBooks Online. I know a couple of people using Xero. What should we be doing?
Yeah, what an awesome question, Lance. So here's how our firm is tracking it. And there's a couple of other theories. So here's what we're doing. Inside the expense section, because we're a QuickBooks Online firm also, and we manage a lot of people's payroll using QuickBooks Online. So, so I'm somewhat limited in how I can change things around, especially when it comes to payroll classifications. Anyway, so what we've done is we created a bucket, a parent account, and we call it COVID-19 expenses. And underneath that parent account, we have a number of sub-accounts: salary and wages, state payroll taxes, employer portion of health insurance, employer retirement contributions, rent, utilities, internet, phone, right? And the final one is PPP loan proceeds. So, and as silly as it sounds to put the loan proceeds as an expense, it's going to go into your expense account as a negative number. All of your actual COVID-19 expenses will come in as a positive number. Thereby, it will bring a reducing negative number. So you'll always have an idea. You'll always know exactly how much money you have left to spend before your 8-week period is up. That's the way we've done it. Other people are using classes. So you could set up classes, a class for PPP. And some people are even continuing to post all of their expenses in the normal expense accounts, like rent and utilities and the salaries and wages, you know, because many MSPs out there are breaking out their salaries for COGS, you know, COGS expense, sales expense, and, you know, G&A expenses, which is great. However, the concern that I have is that the IRS issued guidance just last week indicating that expenses paid with your PPP loans will not be deductible on your tax return. So, you know, do your tax preparer a favor and move those COVID expenses into a separate bucket so that when it comes time to file your income taxes next year, your accountant can say, oh, here, this bucket, let me lift that right out. And, you know, and then everything else, you know, will be income and deductions. The PPP loan money will not be taxable income, but you also will not get the deduction for the expenses that you used to pay that. Now, and let me just clarify that a little bit further. The forgiven portion, the expenses paid with the forgiven portion of the PPP loan will not be a deductible expense on your tax return. If none of your loan gets forgiven, then all of those expenses will be deductible, because then it's just a regular loan. Make sense? I think.
Makes a ton of sense. That's a great methodology to think all this through. It makes a ton of sense to me, and there was a lot of detail there. So, any other coaches have anything on to add to Rayanne's commentary there?
No, I think there are some other questions that will go into a bit more detail that are going to be covered.
Excellent.
Okay, super.
So we received PPP and the $2,000. I think that's EIDL. What do I do now?
Okay, yeah, another super important piece that you should be aware of. You don't get two sets of free money, right? So if the PPP, if you receive the PPP and you receive that EIDL advance, the amount that you received for the EIDL advance that you do not have to pay back will also not be forgiven at the PPP level. So if you receive $2,000 in an EIDL advance, then your PPP loan forgiveness is automatically being reduced by that $2,000. So, you know, it sounds like you don't have to pay back the EIDL, but effectively you kind of do. So they're just calling it something else. And you're not paying it at the 3.75% interest rate, you're paying it at the 1% interest rate. And it needs to be paid back within the 2 years. So for those of you that have gotten both the EIDL and the PPP, you should fully expect, you know, at the very least to have the advance portion of the amount of the advance to not be forgiven at the PPP level. And let me just throw this one out there really quickly. Today is the last day to return that money. So if you wanted to return that money, you could do that. But I recommend not doing that because the interest should not be accruing at this point. So by the time the PPP loan comes due, then you can simply say, hey, here's that extra $2,000. You can pay off the entire non-forgiven portion of the PPP loan before the 6-month deferment is over, and you should be able to do it without penalty.
And to clarify, they have to be used for different expenses if you do want both forgiven, correct?
You won't get both forgiven, but they do need to be used for different expenses. So, if they say, hey, we will use this EIDL, to pay this payroll, but we also use the PPP to pay the same payroll, that's a double dip. And that will further reduce the forgiven portion of your PPP, if that makes sense.
Excellent. That makes sense. What do we have next here? We've got a few more questions coming online, but we've got more already queued up. 1099 and company insurance payments. Can we include those?
So payments to independent workers with PPP money will not be forgiven. It has to be payroll related. So no on that. Company insurance payments, I'm not sure what kind of insurance he's asking about, but so company group health insurance, yes, forgivable. Liability insurance, no, not forgivable. Workers' comp, I am not seeing any indication that workers' comp insurance will be forgivable. So I'm operating under the assumption that it would not. Even though it sounds like it's payroll related, it does not, it has not yet met the test.
Excellent. Thank you. So if we've hired more than the average number of people, is that okay? And I think you partially answered that earlier, but can you kind of recap that?
Okay, so what this question's referring to is you had an average number of employees, in 2019. And so you want to make sure that you do not decrease your workforce by more than 25%, but it is perfectly okay to increase your workforce by any amount that you need. And again, we're talking about forgiveness, right? So we have, you've got the payroll dollars that you need to spend, but you also have a head count of employees that you need to maintain. So you want to make sure if you started, if you had 12 employees before, you want to make sure that you have a minimum of 9, during your 8-week period, because other than that, once you go below 9, then now you're dipping in, you've exceeded the 25% reduction in employee headcount. And that will directly reduce your forgiveness. So they're coming up with an awful lot of ways to not have dollars forgiven. And if I can just go out on a limb here, I believe that was part of the plan all along. Get some money into the hands of the small businesses and the people, and we'll figure out how to get that money back later. We'll help you now, but I guarantee that it was not the government's intention to give out, millions of free dollars. That just doesn't sound like my government.
That makes sense. And what I'm going to do just to prepare some of the folks listening in is I'm going to ask some of you, if you are willing to answer live. If you don't come in live, then I'll go ahead and ask for you. But in the meantime, let's see what the next question is here, Brett.
And Jameson, follow up on this question. I think one of the intents of one of the previous questions was that you're not going to get anything more forgiven than you filed for from the previous year, correct? So for example, if your payroll over an 8-week period in 2019 was $100,000 and your payroll this year is $150,000, the amount that you could max out on forgiveness would be based on last year?
I don't believe that to be the case. I believe that you have to have, you have to pay out 75% of that loan money. So because the loan amounts were based on 2.5 months, whereas the forgiveness period is an 8-week period. So already you've been set up to fail if you're limited to the monthly average from 2019. Because people get raises, new people get hired, people switch over, that you've got turnover rates. I think it would be really detrimental to limit people to their monthly average from last year, because my company doesn't even look anything like it looked this time last year. So I've had probably 3 different people come in since then. So I don't believe that it's the case. I could be wrong, and I'm more than happy to do a little bit of research on that.
Excellent. Thank you.
Utilities, what can we do in that regard?
So utilities, this has been an ever-changing answer from literally day one. Okay, today's answer is you can spend utility money on telephone, and that includes cell phone, internet expenses. And, we have a number of employees now that are all working remotely. And I want to stress this part. Those employees absolutely need internet at their home in order to be able to do their job. So if you are reimbursing your employees for those internet charges for the next 8 weeks, make sure that you get copies of the employees' internet bills from home. And you just want to take out the internet piece. If they've got it bundled with cable and telephone or whatever, just take the internet piece, and you can apply that toward your utility payments. The obvious utilities: electric, water, sewer, trash, gas, natural gas. The normal utilities always apply. Something new called transportation costs. How transportation costs turns into a utility, I haven't figured that part out yet. But, and I'm not even sure the true definition of what a transportation cost is. Does that mean a bus pass so people can get to work? Or does that mean gasoline for the car? Or does that mean, mileage reimbursement? I would like to say that probably the safest one is the mileage reimbursement. So, if you absolutely need to use the transportation costs to get you up, over that forgiveness period, have all of the employees submit expense reports with their total mileage. Where did they go? Why did they go there? How many miles did they drive? And then reimburse it at the IRS rate, which I believe is 54 cents per mile this year.
Excellent.
So I've had a number of questions related to this, and most of it has to do with how broadly they'll interpret the internet access as a utility. So is there anything beyond purely your connection to the internet that you can anticipate being included in that?
Oh, I think I know where you're going with that, Jason. Things like cloud hosting and, and software as a service, Office 365 subscriptions. No,
Right.
There's no indication that any of those things, will be forgivable. I understand that, cloud hosting, especially, when you've got a server, a server sitting up in Azure, and, people need to get to their QuickBooks or whatever, that's just as important. But, the storage of that server does not really constitute a utility, because you're still using the internet to get to it. And, if you think just at the utility level, however, I suppose it could be argued that the storage of that server could fall under rent, couldn't it?
Yeah. Storage of your
So,
data, right?
because you're renting space, you're renting space in a data center someplace, right? So it could, you know, for the very creative, you know, person, could constitute rent. And and again, you can only use 25% of your loan money for non-payroll related costs. But if you needed that additional expense, I might be tempted to stick it under rent.
So related to that, we've got a number of questions relating to rent and lease of vehicles and other things. So the definition of rent, is it explicitly around your facility, or what applies to rent and lease?
You know, that is not being clearly defined. And, you know, I don't know that a car lease would, because I had this question just the other day. I would not think that a car lease would apply, you know, although it could be argued it's both rent and transportation cost, right? So pick your, you know, choose your poison. Which one do you want it to fall under? You know, but other things like, you know, storage units of business records, you know, I've always classified storage units as, you know, rent expense on a P&L. So, you know,
Or
I
leasing
guess,
infrastructure. So if you lease hardware for your data center, would that be a lease, even though it's not any one of those other items, right?
oh, so, you know, equipment leases, you know, I think that's a really also another great argument, you know, whether it's a copier lease or, you know, a firewall as a service lease, you know, it's hard to say where they're going to draw the lines. You know, a lease is a lease is a lease, right? You know, unless it's a capitalized lease, like with the $1 buyout at the end. You know, really all that is you know, is a disguised loan, right? So, but if it's a true lease, you know, here, rent this firewall for the next 3 years, and at the end of the 3 years, I'm going to take this firewall back because it really belongs to me. And if you fire me, I'm taking my firewall and I'm going home, right? So, you know, so that is the true definition of a lease. And if it's a lease and considered commercial leases and commercial rent for sales tax purposes, I would absolutely argue that it would constitute rent, you know, for these purposes. How do you justify charging sales tax on one but not using it for the forgiveness on the other?
Great.
I suppose it's going to be up to the banks or the SBA to make those determinations for us, but I think they're all great arguments, and I'd fight for it.
If you're coming up short on your 25%, that might be the place to go, right?
Right.
Yeah, I'm wondering if the banks want those 1% loans on their books, if they're going to be a bit more lenient with forgiveness.
You know, that's another great question. It's entirely possible. Like, wow, what do I do with this? It's like having a penny stock, right? So, you know, you're almost afraid to put it on your balance sheet.
All right. Next question. Calculating forgiveness, 2.5 months or 8 weeks. You talked about this a little bit earlier. Two different numbers we've all seen, and there's not clarity on what one means compared to the other.
Right. So the maximum amount of the PPP loan was based on 2.5 times your payroll expenses, including, you know, company paid health insurance and company paid retirement benefits. And the forgiveness period is 8 weeks from the date of funding. So like I said earlier, I think it was done purposely so that the entire amount could not possibly be forgiven. They want you to keep your employees, they want you to pay your employees, but I'm pretty sure they also want you, you know, to pay some of this money back.
But isn't part of that also to cover some of the utilities, the above and beyond payroll, 25%?
Right. So that's exactly it. You know, yes, you can have the utilities. They want you to have some working capital money while you are keeping your business running, and you know, and paying your employees. You may be keeping employees on the payroll for these 8 weeks simply because, you know, you've been given the money to keep them paid, but you still have to, you know, keep the lights on, keep the doors open, you know, and find a place for everybody to work. So, and that's why I think they've added in all of these other things. And the internet and telephone was tacked on at the last minute so that if you had remote workers, you could still keep them on the payroll, and, you know, and they could have access, you know, to get to work remotely, you know, and continue to do their job. So to answer the question, it's 8 weeks. The forgiveness amount is going to be the 8-week period.
We have a couple questions that are kind of related to timing. And I've heard this many times. Somebody asked a question specifically, should we be switching from biweekly to weekly pay cycles? Should I be running a special payroll? Not necessarily to lack integrity around when, but if it's the 8 weeks and there's a start date, if I run payroll the day before and I only have 1, 2, and I miss, like, is that problematic, or do we get to do some accrual type of accounting to capture our actual expense when we go for forgiveness?
We've had those same exact conversations. Okay, so the official rule is, the official rule is that the expense must be incurred and paid during the 8-week period. Okay, so what does that mean? The quick answer is that you can't pay 6 months worth of, you know, rent in advance during your 8-week period and expect it to be forgiven. You know, that's obvious. But if you got funded on May 1st and your payroll, you know, your payroll landed on May 1st, even though that payroll was for the 2 weeks prior to May 1st, payroll is always, always, always deemed paid and incurred on the date that the employees receive payment. So your funding on May 1st means that your May 1st payroll counts, right? Now, if the banks later come back and say, nope, sorry, you know, we're not going to allow that one because it was for the payroll outside or the pay period outside of the loan. Okay, well then by those rights, you have to add in the payroll on the outside on the other side of it, because that payroll period does fall into the 8-week period. So I think we're really talking semantics. If, you know, if one is denied, the other must be allowed, you know, but I'm operating under the assumption that payroll is always on the cash basis. That's the way the IRS treats payroll. You know, if you get paid on January 2nd from your employer, then that payroll lands in the new year's W-2. It's, you know, even though you worked it in December, that doesn't matter for purposes of payroll taxes. If it's paid on January 2nd, then it's in the new year and not the year in which you worked it. So, you know, so that's the way that I'm generally operating. And you had another, should you switch pay cycles? If you do, make it permanent. Don't do it just for the purposes of your 8-week period. And finally, should you do an extra payroll run? So here's, you know, the one thing that I might do, if I were to do anything, and this is probably as unscrupulous as I would be willing to get. So if my 8-week period ends on a Thursday and my employees are getting paid Friday, I might pay them on the Thursday of that week. You know, so I might run payroll a day or two early during that week, but I'm certainly not going to escalate it, you know, by a week or two. I don't think that that would sit well, you know, and in my stomach anyway. Others may have stronger stomachs for that sort of thing, but I do not.
So think cash versus accrual is kind of what I heard there. If you're biweekly or weekly, you're going to have the same number of payrolls hit in an 8-week period anyway. And then maybe the kind of issue I could see is if you're a twice monthly, semi-monthly payroll and you fund on May 2nd, you may actually miss a whole payroll because you're not quite every 2 weeks. You might actually miss an entire payroll. And that's one that you might pay a day early at the end of June just to make sure that you fit fairly, because it's not a lack of integrity. It's about fitting actually 8 weeks of real payroll from a cash perspective.
Exactly, right? So I have a couple of clients that pay only once a month, and they pay on the 15th day of the month, right? So they got funded around April 25th. So sure, the May 15th payroll will land in the 8-week period, but the June 15th will not, because, May's got 31 days, and they got it right after their payroll run in April. So they're going to likely miss that. I might escalate that payroll by a few days to get it in. That's
great. So I have some questions online. I'm going to ask some folks that are in the audience if they'd like to come out and talk, ask questions live. So I've just asked a couple folks. Let's see if they pop on. Again, a new feature in the webinar I've not tried, so we'll see how this goes.
I love experiments.
Yeah, let's experiment. And if it doesn't work, I can read the question, so it won't hurt us too badly. So I just asked Steve had a question about prorating rent and payroll, very aligned. And if he wants to come off and ask the question, I'll give him a second. Okay, he hasn't unmuted or come on yet. So let's just ask the question. Is there a way to prorate, very aligned, which is why I chose this one, a way to prorate rent and payroll when the 8 weeks don't align perfectly and payroll's dispersed 7 days after earned? So it kind of takes the same question to rent, accrual cash. How do we deal with that?
Okay, so again, I still think we're talking semantics because 8 weeks is designed to be 2 months. So you can prorate, if you get funded on May 7th, you can prorate, from May 7th to May 31st, and then, all of June, and then 7 days into July, or whatever, the actual, count is. But, I still think that you're talking about 2 months of rent. I would not go through all of that trouble to try to prorate on the beginning, on the front end, and prorate again on the back end, when it's likely going to come up to 2 months worth of rent. So I would have the May and the June invoices, ready and scanned in, to submit as documentation, and call it a day.
Great. That's great. I'm looking through our questions, and about half of them are aligned to this exact topic. Like everybody's asking this exact set of questions. I've asked, Michael Baker had something a little unique around when we've talked about one-time bonuses. But if you can come off mute and ask the question, see if he does. All right, that's not working. So I'll ask for him. He asked, and you kind of mentioned this before about bonuses. You said if they are part of the normal cycle of things, yes. But his question is very specific. Can we give employees one-time bonuses for hardship during this time? There's
no specific documentation that says that you cannot give one-time bonuses. I might, if you were to do that, right, I just want to throw this employee an extra $500 or an extra $1,000, because they're having a rough time with all of this. I think that's reasonable. Do you want to start sending out $10,000 bonuses to your employees for the one time that you've never done that before, just because you now have the extra cash? I'm not sure that you could justify that. And before I get off of this topic, can I just say one more thing? This money is not designed for shareholders to take distributions. So any distributions to a shareholder don't expect for that to be forgiven. You may be used to taking $20,000 distributions on a monthly basis, and you say, well, that's part of my pay. It's not part of the forgivable pay. So this money is not designed for shareholders.
And if I could just tag on to that, I've had a number of folks asking about adding family members or potentially those who work for the company part-time, giving them bonuses and those kind of things. And there's, to your point, if it wasn't done before, shouldn't be done now. And there's been talk about potentially a family calculation even. I don't know if you've heard anything related to how something like that might be handled, but do you anticipate any caps?
So I ran into this very recently. Husband and wife, are both shareholders in an S corporation, right? And the wife is minority shareholder, like 1%. And the husband is the 99%. He's on payroll. He manages the company. He's the president of the company. Wife has a separate business off to the side and makes plenty of money on her own. So at the end of 2019, we decided to take wife off of the payroll, and put that extra money toward husband's payroll and let her go and make her own money. Well, since the wife's other job is real estate. And in the last couple of months, she has been unable to show houses or, really do much of real estate of anything. So she's been actually working in the company, maintaining the books, putting things together, updating their PSA, putting together different, procedures. And they asked my permission to put her back on the payroll. And I said, well, if you're working, you need to be paid for it. So yes, to put, many people put children on their payroll just to funnel money through their company. Now would not be the time to do that unless the child is actually doing some work, so, don't make up employees just for the sake of making up employees, but pay people for the work that they're actually doing.
But if people had children, for example, on their payroll prior to this time, that's probably not going to be a flag, I would
Correct. Right.
Yeah, now's not the time to be getting tricky. Yeah. Okay. That makes a lot of sense.
Right. 8 weeks, hold off all of your bag of tricks until the end of the 8 weeks, and then pick it back up again.
Excellent. I had a couple other folks I asked to answer live. I don't know, they're not really coming off mute, but I'm going to ask this. I'm going to ask a question that just came in via chat. If a shareholder is also an employee receiving paychecks regularly, even before COVID-19, is it okay to count their paycheck under forgivable?
Oh, absolutely. Yes. Shareholders' payroll checks are absolutely part of payroll costs. And, because of course, if you're a shareholder in a corporation, you're required to take a payroll. So it would be unfair of them to reject the shareholders' paycheck that they're required to take.
Okay, excellent. Another question related, can you address specifically how a sole proprietor that received PPP based on Schedule C is going to document the 8 weeks for forgiveness, since they don't take payroll but distribution?
Right. So my understanding is there will be either, it's going to be, because it was based on one, I think, let me see if what I read was the forgiveness for the Schedule C or the sole props will be 1/52nd. So the weekly average will come out as, you take the annual amount and you divide it by 52, you multiply it by 8. And I think that's where you're going to get your forgiveness amount.
And that's an automatic forgiveness, by the way, because I fall in that bucket. The way that my company is designed, and I spoke to the bank, and that's their exact answer. If you're a sole proprietor under a Schedule C, it's an automatic forgiveness of basically 8/52 of your last year's Schedule C.
Fabulous.
And you can still use whatever the difference is for those utilities and payments, But if you have a home office, it's the percentage of it that you're already paying based on your taxes.
Right. Right. Yeah. So the home office expenses, I think, are also going to be one of those tricky areas. Although, corporations don't have home offices. Not many people understand that, unless the corporation owns the home, there is no such thing as a home office for a corporation. So, what generally, for those of you that are working from your home office, the corporation doesn't own it, you, the person, owns it. So you, the person, should submit an expense report for your portion or for the business's portion of your personal expenses, and then have the company reimburse you dollar for dollar for those expenses.
Right.
So when you're talking about, well, I use my house for 300, I've got a 1,000 square foot house, and I'm using 300 of that square feet for my, for my designated office. Those calculations don't translate well to at the corporation level. There's no 8829 for, a corporate return. So, and of course, the itemized deductions for the employees' use of the home is no longer deductible. That went away back at the end of 2017. So the best way to get your money out of a corporation for home office expenses is to submit an expense report.
Excellent. Thank you. Here's a kind of a very specific question. Does the 8-week period begin the day the check was deposited or the day the check was written by the bank?
Interesting. So the official wording is the date of funding. So I think that it is the date that the bank writes the check, because at that point the loan has been officially funded. Where you can stick that check in your purse and drive around with it for 3 weeks, but your 8 weeks is still ticking.
Excellent. And then a couple of things specific to payroll expenses. I see you've kind of gone over this, but it may be a little more detail. Somebody asked if you could review the forgiveness portion of payroll as far as the federal tax portion specifically, and also do the employer taxes paid on payroll count as payroll expenses?
No federal taxes will be forgiven at the PPP loan money. So, the employee's portion, the amount that you withhold from the employee, that's already covered in the gross pay. The employer's portion, Social Security, Medicare, and FUTA tax, they will not be forgiven. So, sorry, but, I mentioned this, the state's portion, not state withholding, because that's already covered under the gross payroll, but the employer portion of state taxes, whether it's, like I said, unemployment, disability, family medical leave, employee training tax. Some states have that. There's all sorts of crazy employer taxes at the state level. So they will count.
Great. Well, thank you. So I have, I'm watching chats come in begging us to make the recording available so that they can sit down with their CPA and watch it together.
Okay.
But we just have a moment left. What I'd like to do, if we can, is ask any final kind of wrap-up comments, Rayanne, that you'd have, and how would people get in touch with you if they had more specific questions or want to talk about your services?
So first of all, if you go and you talk to your CPA about everything in here, and you find that there is something that I've said that was inaccurate, by all means, please contact me and let me know. We know that the information has been changing literally every day since, the CARES Act was passed and signed on March 27th. So I do everything that I can to try and stay on top of all of the changes, and read all of the latest legislations and the rules and guidelines. But if I miss anything, and somebody else happens to pick up on that, please share it with me, because I'm like one of those sponges. Right now I joke. I get so much out of the IT community from from the IT community. Right now, I'm just a weatherman in a hurricane, right? So I've got the hurricane going on. I'm the person giving out all of the information, and I'm talking incessantly about it. If you want to reach me, you can find me at abcsolutionsfl, like Florida.com. So it's abcsolutionsfl.com. If you go to my website, there's I have a blog. You can see my blog where I've written an article called, Maximizing Your Forgiveness for the PPP loan. I also have a resources page where I'm putting up new information as soon as I get it, and then I summarize it and I put it up on my resources page. So there's a lot of good information there, and feel free to reach out, anytime. I'm happy to help your members at any time.
Wonderful, thank you. And we will we'll add a link to that article, if that's okay, on our website so people can find it. That would be great.
Thank you.
And we'll be sending out a follow-up email shortly for everybody who registered. Thank you so much for attending. Thank you for Fred, Brett, Jason, everybody helped coordinate and put effort into making this happen. Rayanne, super appreciative. That was a bundle of great information. We didn't lose anybody for until the last minute, and that's going to happen. But we lost nobody during the hour. That rarely happens on a webinar. So clearly, tremendously strong information. If you have any questions about ConnectStrat or want to know a little bit more about what we're doing, again, we'll send a follow-up email to everybody who registered after, so you know how to find us.
Thank you all so much for inviting me, and I was glad to be here.
Thank you.
Thank you.
Bye-bye.
Bye.
All right. Thanks all.